Hi, welcome to the Market Alert for Friday, the 29th of May 2020. So, initial job claims yesterday came out at 2.1 million. Lower, we can see the decline there, of course, but again, this taking the total to over 40 million, and it's still going to increase. And I wouldn't be surprised if we don't see 60 million by the end of the year. So even though we've got a downward trend in this, as you'd expect, the economy isn't fully opened yet. We've still got to see whether people return to restaurants, fly, etc., etc. So I'd expect these figures to continue at 1 million to 2 million a month, probably flatten off for a while, and may even spike before moving down. But certainly would be conceivable to see at least another 20 million, unfortunately. So what was the market's reaction to this yesterday? Well, as predictable as ever. I go to the 5-minute chart, and this is when the news was released. The market then moved higher and then got slammed into the open there from the high by 250 points from this high. And prices then finding support. The classic shakeout, you can see the buying coming there with the green bars. And then we get the retracement, and then we move the market back. Also 76%. Let's just have a look at this from the high to the low, and we'll just drag these over, and you'll see there to 78% before the market then starts to move lower. And the same here, just to clarify, from the low to the high there comes back 62.78 before the market started to move. So the shakeout out of the way, same pattern, and then the market higher. However, towards the end of the trading session, prices failing to hold, and a bit of a sell-off at the end of the session there. I don't know what's behind this. I think unless it was Trump signing the executive order to stop the thought police at Twitter. I don't know what it was, but anyway, this moved the market lower. It probably had an effect on the FANG stocks: Facebook, Amazon, Netflix, Google, etc. So maybe something that came over from the Nasdaq. So prices moving lower overnight, and then all of a sudden finding support here at the S1. You can see the buying coming in there as the market is tested, and then making a rally up 100 points, back 50, and then back to a double top at the moment. So it wouldn't be at all surprised today to see the market continue to move to the upside and head towards that 26,304 level there, as prices have continued to do so for the last couple of weeks off the 50-bar moving average there. And in the weekly chart, we're through the 62% retracement as well at the moment, and the same on the monthly chart, stuck at the 20-bar moving average there in the monthly as we approach the end of the month. And then finally, we've got the implied volatility, and this ticking up a bit yesterday as after the market moved lower. But there's still room to come back on the downside here before we get the next correction in the market, which maybe the October. October is always a favourable point for the market crashing, pulling back, shaking out, whatever you want to call it. That's this seems to be the preferred time over the years. But again, we'll just have to wait and see. But at the moment, I can't see any particular reason why the market wouldn't continue to move to the upside in the short term, as the Fed is buying everything that isn't nailed down at the moment: corporate bonds, ETFs, mortgage-backed securities, and they're going to continue to do that for the foreseeable at this point to try and save the economy and the world, of course. Okay, that will do it for this one. Just a quick whistle-stop tour. Don't forget, today we've got the man himself, Jay Powell, will be out later, and it appears that Trump's also going to be speaking now. This one's been added. This wasn't there yesterday. So Trump's going to be making a statement, but Powell at 4 p.m. That's British summer time here in the UK. So see what he has to say and how the market reacts to what he's got to say. Okay, that's it for this one. As ever, thanks for watching. See you in the next.